what do you call a company when it reports an amazing result and then the stock does nothing? Well, because it's a downer day for the industrials, I call it a gift. Take Cramer, Fave, and Charitable Trust Holding Illinois Toolworks, the maker of specialized industrial equipment that just this morning delivered a beautiful top and bottom line beat, also raising its full-year guidance, taking organic growth up. That's what we care about. It was a classic beat and raise. Yet because investors freaked out about General Electric, which is really kind of a faux industrial, nobody wanted to touch the group today. So it only went up about 70 cents. Do not take it from me. Let's check in with Scott Santi. He's the terrific chairman and CEO of Illinois Toolworks. Learn more about the quarter and how his company's prospects. Mr. Santi, welcome back to Mad Money. Good to see you, Scott. Have a seat.
Good to be back. Good to see you.
You have always told me that your business model is such that if one group may not be on fire, another one can be. Auto, not as strong as you'd like. Welding, off the charts. You're the most diversified company I've ever seen, and there's always something or two or three that are working. This model is perfect for this environment, isn't it?
Well, it certainly gives us the ability to take, sort of a hit in terms of some economic pressure in one area and offset it with another part of the company that is doing pretty well. I think that played out very well in Q4 overall, where we had a couple of parts of the company, like auto, as you mentioned, right. And also food equipment that maybe were a little softer given the near-term market conditions, and more than offset by test and measurement, welding, in our specialty business. I think go ahead, please.
I want to talk about welding.
Yeah.
We have a huge number of companies that are growing that we feature in the Southeast. And all of them have one thing in common. They need welders.
You bet. Your
equipment is uniquely set up, as I understand it, to make it so you don't have to be a genius in welding to be a welder. And that's what's taking off.
Yeah, absolutely. So one of the real issues with a lot of trades these days is that there's a growing shortage of skilled and trained labor. You see it in the automation arena, certainly in the welding arena. So, big component of our innovation focus there is to take some relatively sophisticated technology, but create user interfaces that allow you to apply that sophisticated technology to a lower skill level of trainee, if you will, and they can be very effective at their job.
I mean, there was a time when we only had welders on boats in Bethlehem Steel. This is fantastic. Another thing I'm interested in, you talked about, don't worry that much about auto. We're locking in good numbers for next year. How do you lock in a good number?
Well, we are, the story for auto is that we've been growing that business faster than the underlying auto build growth by 3-4 percentage points consistently for the last 3 or 4 years. So the story there for us is really about penetration gains. Bills will go up, bills will go down in terms of the overall economic cycle. But our position is we compete and supply a niche there that is very sort of highly engineered. Our content today in this category of relevant space, the spaces we're interested in, is maybe $35 on a per car basis. Okay. We think we have the potential in terms of the overall market size to be certainly double that over the next 5 years or so. So plenty of room to run regardless of sort of the ebbs and flows.
Okay, so if it's 17 million, it doesn't matter. You can make
matters a little bit.
Right,
but
that's
yeah,
right. Well,
but
now, there's another part of your business that I absolutely love that is challenged right now. But I know you can't get out of it. I wish you'd double up on it. This food equipment business, because you're the best at it.
We love that business as well.
But you don't mind that it's had a couple quarters that are soft.
Don't mind at all. We're in it for the long haul, Jim. We've been here ITW's been around for 105 years now. Our focus is on building, a company that can perform through thick and thin, and from the standpoint of fundamentals, fit with our business model. Food equipment is right at the top of the charts across all 7 of our businesses in terms of great fit for us long term.
Okay, we're opening a second restaurant.
Congratulations.
Just announcing it right here.
Yeah.
Because we feel regulatory environment better. We feel a little, kind of feel the bubbling up.
Yeah, terrific.
We use the Salamander product, and it is the best broiler in the world. But my wife told me, because she's the manager, she said, your stuff is the best, but it's a little pricey. Now, is there ever a chance that you guys would do a little more downscale or buy some companies that maybe are not as elite as Vulcan, as Salamander?
Well, we would give you the family discount.
I don't want a discount. I'm just saying your stuff is known as the best, but it's a tougher time in that business.
Well, it is, and I think there are certainly elements of positions that we don't have today that we might extend into going forward. But overall, our focus is on really sort of the parts of the market where the performance really matters to the customer. Right. The more sophisticated, more challenging environments are really the places that we try to line up and play long term.
But again, very cost saving. in the end. If you can pay it up front, right?
Absolutely.
You save a huge amount of money.
Right, lower operating costs, lower use of electricity, lower water consumption and dishwashing.
It's $1,500.
I'll make the pitch after the segment.
All right,
So,
and test and measurement, why so strong?
Really what we're seeing, I think, is the front end of a recovery finally in the business investment cycle.
Okay.
So, the big story for us in Q4 was it was the strongest organic growth rate we had all year, and it was largely driven by a noticeable further acceleration in the parts of our company that are tied to the CapEx cycle,
Well,
so the equipment end.
And it probably get better with the accelerated depreciation, and of course, the better regulatory.
I think so. Yeah, I think we're set up well heading into 18.
I think your stock would have been much, much bigger if it weren't for the fact that we had the roller coaster industrials. It is an opportunity. That's Scott Sandy, Chairman and CEO of Illinois Toolworks, ITW. This is a remarkable company. Go and read the deck. Go and read the conference call. You will see it is just an amazing, amazing shareholder-friendly company. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.